lesson, we're going to go over the basic loan types and how you can look at them and use them with your client. So if your clients say, I have a 580 or a 620 or a 700, you know kind of what they can go for and kind of which ones might be better for them. This is just basic knowledge. Of course, your lender is the one who's going to have the final say to help them the best and know what their situation, but you need to understand the basics so that you can talk and make sure you make sense when they ask questions about it. So I'm not a loan officer, but I do understand that many companies have their own special programs. Remember, this is just a good basic overview of the subject to help. Okay, so financing types and scores. So I talk about 5 major ones. This may have changed a little bit, so it just depends. It changes with COVID, it changed, all the different times it changes. So just take this with a grain of salt. This is just a rough overview. Again, you can get the exact limits. It's called overlays from your lender. They all have certain ways they want to keep it at certain amounts and certain levels and certain scores, etc. Those are called their overlays. So of course, cash is great. Super low closing costs. You're only paying for certain fees and can usually close in 10 days. You need proof of funds to secure the deal. So that means proof of funds is not taking a picture of your cash. You have to send out a bank statement or a portfolio statement or something that can show that the money's there and ready to go. Now, if your client has 50, 60,000 in a safe in their house and they just go deposit it, they're going to have to wait about 2 months before they can buy the home, because you need a statement showing that the money is there and not that it was just deposited. Otherwise, they're going to ask where that deposit came from, and if they can't track it, it's going to raise red flags. FHA is the next one a lot of people use. I say 580 or higher. Right now, some people want you to still be at 620. Right now, if you want to use down payment assistance, we'll talk about that in a minute. That does need to be a 620. So I'm going to leave 580 in there, kind of. It just depends. It is 3.5% down. So some lenders, they can go a little lower if they manually underwrite the loan. That means they write the loan in-house and they can reduce some of the fees and such. That loan does have an insurance, a mortgage insurance on it, and that makes the payments a little bit higher. But this is the loan that is the easiest pretty much to get approved for. So it's the easiest to qualify for, but it has a higher monthly payment. So you have to kind of balance this. So now you kind of think of scales. The loan might be easy to qualify for, but you might have a higher payment because you have a qualification that way. So just kind of start weighing the benefits and negatives of the loans. Conventional, 620 or higher for almost everybody. I put 1 to 5% down. It's usually 5% down, but some banks will put in there, or some lending places will put in a 1%, 4% grant on top of that. So they say, no problem, come in, we'll cover the rest with the grant. And that's why it's only 1% down for those places. So the loan has the most equity in the home, but it also has the highest down payment needed. So mortgage insurance is needed until 20% of the loan value is paid off. So if it's a $100,000 loan, once they pay off $20,000, when they have $80,000 left, they'll take off that insurance and your payments will go down. So it's the highest down payment, but you have the most equity in the home. And with conventional, you can put as much down as you want. It's a minimum of 5%, 1 to 5%, but you can put as much as you want to keep your payment down. VA is a good one. You see I have between 580, 620. Some lenders now say they'll go as low as, I know I've had some say they can go as low as 550. Officially, there's no a point of a credit score for a VA loan. It's just whatever the overlays of that lender is. So you could have a 500 if you have, 100,000 in the bank and everything looks great. You could get a VA loan. You just didn't have any credit. So that is an option for some places. So don't freak out about the score as much. Just let VA people try to do that. So it's no money down. You need to have at least 90 days of active duty, not including basic training, with an honorable discharge if you're no longer in the service, or a discharge other. It just can't be dishonorable discharge. In the National Guard or Reserve, you need to get their letter of eligibility, the LOE. It can be gotten from the VA or www.ebenefits.va.gov. If you go to ebenefits.va.gov, it's easier for the veteran to do this. They click it, it opens up right in the middle. It says, get my VOE, or LOE, letter of eligibility. Click it, it takes them 5 minutes. They get a copy of it, they send it to the lender. The lender can order it, but it can take them a couple weeks. So just depending on what your time frame is, it's a lot easier for the veteran to do this. Now there's a funding fee. It's usually around 2.5% for the first time and 3.3% for after that. Now, if you have any kind, I say a 5 to 10% service-related disability, but I've seen them waive it for as low as 1.5%. If you have any kind of disability, they're going to waive that funding fee. Okay, so that's a good one. So this has a low down payment, none, no mortgage insurance because the VA guarantees the loan, but it has the least amount of equity. So say you buy a $200,000 home, but you need 2% in there, 2.5%. That's around $5,000. So instead of a $200,000 home, you're now buying a $205,000 home because of that funding fee. Unless you have a disability, you can get rid of that funding fee. So the good thing about this home, but usually the funding fee is wrapped up into that loan. So there's no down payment, has a low monthly cost of other loans, but you don't have any equity because you don't put any money down. Now you can put money down and still use a VA loan, that's fine. And then you can save on those funding fees and have a lower monthly payment. Now USDA, if you go to USDA, I'm going to try to open that real quick as well. So on USDA, when you click on that link, you have to go here to their website, to property eligibility, and you go to accept. And then once it pulls it up, it'll show you a map. Okay, I'm just going to pick, actually let me pick 340. This is an old house I used to live in. Fallen Leaf, San Antonio, Texas. I think it'll pick it up. I don't remember the zips. Hopefully it'll pick it up on that. All right. So as you can see, that home where I used to live years ago is not eligible. It's gray. But if you scroll out on the map, everything white is eligible. So this is San Antonio where I work. So right here you can see this whole area in Converse is eligible. A whole bunch of crazy places up here towards Cibolo. A whole bunch of New Braunfels and around it. Marion's all eligible. If you head up towards Bernie, there's a bunch of Bernie in the area over here that's eligible in different areas. Fair Oaks Ranch is eligible, you can see. Just depends. So anywhere that's eligible like this that you see, let me skip back to our slides. You can check that area by going there, okay? So what that means is it's a no money down loan. You do need a 640 or higher, and the property has to be in one of those areas. And you can check the areas by clicking on that link in the PowerPoint. Now there's no mortgage, there is mortgage insurance on the loan, so the payments are going to be a little higher as well. But there's no down payment, and it's a low equity, it's a higher monthly payment. So keep that balance in mind. No down, but a low equity and a higher monthly. So you can kind of look at it like that. So this is great if someone wants to buy a piece of land in the country and doesn't have a lot of money for a down payment. As long as they have a 640 or higher credit, they can get the USDA. No problem, they can roll right into that type of loan and they'll be good to go. Now the Texas Land Vet and the Texas Vet Loan, it's a special veteran loan, a special loan for veterans to buy land. You need to buy at least 1 acre and have 5% down. So the current rate is somewhere around 7.25. I didn't check in the last couple weeks to make sure that's the same. So take that with a grain of salt for 30 years. So the good thing is if you buy a $100,000 piece of property for 10 acres and you only have to put 5% down, that's only $5,000 down. And then you can finance the rest for 30 years. So it's a very good loan for veterans to get land at very least expensive. So it does have a 2% origination fee. So they have the origination fee. I don't know why they charge for a rate buy down when the rate's that high, but that's what they do. So you'd have to check those fees as well with your current lender and make sure. Like I said, I'm not a loan officer. I'm just giving you a heads up so you can talk smart with your clients. And you can kind of go like that. So by having the disability rating they say they're 30%, but again, I've seen it as low as 2.5%, and they still waive the funding fees and a lot of those fees. And then that would save you that money as well. All right, so that's the basic loan types. Hopefully that helps you understand when your client comes to you and says, hey, I don't have any money. Then you can think right off. Okay, are you a veteran? Yes, I'm a veteran. Okay, boom, let's take you to the VA loan, no money down. And then you say, oh, I'm not a veteran, but I want to buy in the country. Boom, right there, USDA, no money down country loan. Let's say they're like, hey, I have a 580, I think, or a 600. Okay, they probably are going to qualify for FHA. Then you can talk to them. Do you have the down payment of 3.5%? I don't. Let's get you a grant then. They have government grants that can cover those. And then if they're like, hey, I'm a 700, I have 50,000 down, that's an easy conventional. Everyone loves those. Those are a no-brainer. So hopefully when you kind of think about like that with your clients, when they come to you and say, hey, this is where I am and this is what I need, you can walk them through that and help them. And then that way they can be very successful. So hopefully that makes some sense. Again, reach out to me If you have any questions, Andrew Morin, Traveling Realtor. Talk to you soon.